Hello, I'm Peter Clark. I'm a retired life insurance financial advisor. I have created a service called My Life Audit. Now, My Life Audit is basically a free information service to help consumers when they consider buying life insurance or have bought life insurance. I've found through the years that many people find buying life insurance to be complicated, confusing, and expensive. And it can be. Now, I want to talk today briefly about a very important life cover for families with young children, especially. And that is death cover combined with a will. Now, one or two things can happen to a family. The first one is, should the main breadwinner die? Let's say it's a father, for instance. The father dies, then the mother is left behind with the young kids, and it can be safely assumed that in most cases, that their standard of living will be dependent on how much money was in the will. There can be no doubt about that. Very important thing to consider. The other thing is that should both parents die, then there will be orphans in the family. There will very likely be a guardian appointed to take care of your children on your behalf. But once again, their quality of life will very likely depend on how much money was provided for to pay this guardian to take care of your children. It's expensive to rear a child, especially over a long period of time, say 8, 12, 15 years. There need to be sufficient money to take care of the children. Now, how do you get the most death cover for the most affordable price? That is one of the most important questions facing any family. We have an example here of a 35-year-old plumber, a non-smoker, and he had 2 young kids, 3 and 5 years old. Here the option of one of 2 covers, death covers. The first one, you could get a cash payment should he die, 500,000. Then it would cost him $35.45 per month in a premium. The other option he had is that he could go for a combination death cover, and that would give him 1.285 million, almost 3 times more. The premium would increase to $57.14 per month. That equates to exactly $5 a week more. Only $5. That's the price of a cup of coffee. But look how it would benefit his family should he die. It's obvious which one he took. He took this one, of course. Most of my clients for the years, when I was still an insurance salesman, went for this one. All of them with young children at home. If you currently have a cash death cover and you want to know more about how to get this combination cover, just contact me. My link is below here. I'll send you a very brief summary of what's involved and how it compares to a death cover and the benefits thereof. I will also show you how you can get 2 free wills. Very important, one for the mother and one for the father. Free of charge, combined with the death cover. It is very, very important that you make sure that you protect the family with a sufficient cover at an affordable price. Contact me anytime. I look forward to hearing from you. Bye-bye.
Hi there, Paul here from Paul de Klerk & Associates. I just want to show you very quickly how you can save a lot of money on life insurance premiums if you just understand a very nice little structure that Partners Life has made available in New Zealand. This is especially relevant for those who are, say, mums and dads with little kiddies to look after, dependent children, and you're worried about providing for the family should one of the parents die. So I'll get right into this and make me a little bit smaller. Into the corner I go. I have a live quotation tool open here with Partners Life. They do something very unique. There are all my personal details, so I'm going to use myself as an example of exactly how you can save money. So let's just say that I want to add on a life insurance policy of $1 million worth of value. Makes sense. New Zealand is not a very cheap place. I might want to cover a mortgage, provide lost income for my family should I die, things like this. So in my case, $74.64 a month would be the premium for me. Not too bad. But there is another structure that's available. I'm going to decrease that to say $250,000 worth of life insurance, but then also add life income insurance. Now, life income allows you to have a policy that pays out a monthly sum of money over time. I'm going to do $3,000 a month for 15 years because the two together is still worth $1 million worth of payments. The trick is the compounding interest effect. Now, if you put the $3,000 a month over 15 years into a compounding interest calculator, that is what makes it worth so much. It's worth just over $1 million worth of value. But now, instead of spending $74 a month for $1 million lump sum upfront, it decreases now to $60 a month. That's a 19% saving right off the bat. People find that very, very appealing and compelling because it still does the job of providing for the family. If you wanted to make these figures whatever you want, you just let me know and I'll happily work that out for you and send you a no obligation personalized video of how this works for you. But Paul, what if $3,000 a month is too little? I want more for the family. So, okay, if we make it $4,000 per month, factoring in the compounding interest, the two together now becomes worth $1.285 million worth of family protection. If you did a $1.285 million policy upfront payment, that would be $92 a month worth of premium. But with this structure, it's $69.81 a month, a 25% saving, which is simply massive. Let's carry on. What if you wanted $5,000 a month worth of family protection? It's all completely up to you. Over 15 years, that policy now would be worth $1.5 million worth of protection. If you did a lump sum payment, it would be $110 per month. But why spend that when you can spend $79 a month? Still gets the job done. The families get their money. 27% saving in premium. Again, simply huge. Simply huge. What if you didn't want 15 years? What if you wanted longer? You might have very little kiddies. So let's bump that out to 20 years worth of payments. Click calculate. Now those two together, the $250,000 upfront plus $5,000 a month for 20 years, that makes it worth $2.2 million worth of cover for only $95 a month for me. That is a 37% saving if I rather did this structure instead of doing the lump sum upfront, which would be $153. Now you're probably asking, how is this compounding interest going to work? Now let me bring over a calculator and show you how compounding interest works. If you did a $250,000 lump sum upfront payment, or whatever it is that you choose, you just let me know. In the first year upon your death, the family will get $5,000 per month. It doesn't stay there, right? The last check that the family gets is not $5,000. You'll notice it increases every year. With Partners Life, it is a minimum 5% worth of growth over those 20 years. So by the time you get to year number 20, the family won't be getting $5,000 a month. They'll be getting $12,000 per month. You add up all of those payments plus the $250 upfront, it's worth $2.2 million. Right? So a very compelling case can be made for a lot of people who might want to save some money here. But now, if you want to get your own personalized video from me where I show you without any obligation how this works for you, just go to my website. There's a link below this video. It'll take you to this page. Just click on get a free quote and I'll record your own video. Don't forget though, I have some other handy videos here about trauma insurance, income protection, medical, always available on the website, no obligation. And so if you click on get a free quote, you'd notice there is a page of just of some of the information that I would need to be able to get you your own quote. That'll just be your name, date of birth, things like this, things I would need to be able to work out a quote. So happy to help. Looking forward to hearing from you. Take care, guys, and we'll chat soon. Bye.